Well, this is quite something. Just when, inflation seemed like the big economic story that wouldn't quit,
Uh-huh.
the latest consumer price index data lands, and it's uh, actually showing a dip below what people were predicting.
Yeah, a bit of a surprise there.
So today, for you, the learner, who needs to get a real grip on these economic shifts without getting totally swamped, we're doing a deep dive into this new CPI report.
And we're drawing on some analysis,
Yeah,
right, from Rebel Capitalist on YouTube.
exactly. We're going to unpack what these numbers really mean, especially with all the background noise about tariffs and that sort of lingering worry about stagflation.
Right, the stagflation talk has been pretty persistent.
It has. And what's interesting right away is this contrast. Lots of talk about sticky inflation, and then boom, data points maybe slightly the other way.
Makes you wonder what's really driving things under the surface.
Absolutely. The rebel capitalist analyst pointed out how that buzz around stagflation, slow growth plus rising prices, it's been quite loud.
Hmm.
But this CPI data, it seems to, well, throw a bit of a spanner in the works, as they say. Their first take on the report really highlighted this unexpected downward nudge.
Especially given the tariff discussions and those stagflation fears.
Yeah, they even mentioned a previous discussion where they argued stagflation wasn't maybe the most likely path forward. So, okay, we have this surprising number. What are the key figures we need to grasp?
Okay, let's break it down. The main number, the headline CPI, that gives you the overall inflation rate. It came in at 2.3% for April, looking year over year.
2.3, and that's down from March.
Right, down from 2.4% in March. And actually, it's the lowest annual rate we've seen since way back in 2021.
Wow, okay. And month over month? Because March was negative, wasn't it?
It was. April saw a 0.2% increase month over month. So yes, a slight uptick from March's negative print, but the bigger picture, the annual rate, definitely suggests some easing.
Okay. And what about core CPI? That's the one that takes out food and energy, right? The more volatile stuff.
Exactly. So a core CPI was also up 0.2% month over month in April. That puts the annual rate for core at 2.8%.
Still above the Fed's target, but moving maybe in the right direction, or at least not accelerating.
Well, it's certainly part of the bigger picture we need to consider. Stripping out food and energy aims for that underlying trend.
Got it. Which brings us back to stagflation. The rebel capitalist view seemed pretty doubtful about that scenario. They really hammered on nominal wages.
Yeah, and that's such a crucial point. The argument is basically this. You can't really have sustained high inflation across the board unless people's actual paychecks, their nominal wages, are also rising significantly.
Wow.
The video used this analogy like robbing Peter to pay Paul. If things cost more but your income isn't keeping pace, there's a limit, right?
Right. You just can't afford everything going up indefinitely.
Exactly. Without that broad wage growth fueling spending, really persistent inflation gets, well, less likely. It puts a natural brake on things.
That makes sense. Okay, now tariffs. That was a big focus in the rebel capitalist analysis. They mentioned these Liberation Day tariffs supposedly kicking in around April 2nd.
Mm-hmm.
So the big question is, if these tariffs are meant to make imports pricier, why didn't April CPI jump more significantly?
That's the puzzle, isn't it? I mean, the basic logic is tariffs are a tax on imports. Importers pay more. Eventually, consumers pay more.
So you'd expect a fairly quick impact.
You might think so, especially on goods arriving at ports. The video's reasoning was, look, if these new tariffs were having a massive, immediate inflationary effect, you'd probably see some sign of it in the April numbers.
But we didn't really see a big spike.
No, which suggests maybe the impact isn't as immediate or perhaps not as widespread across the whole CPI basket as some people might have assumed.
The analysts also sounded a bit frustrated, didn't they? With, biased interpretations.
Yeah, they mentioned sort of two camps. Some economists are just automatically saying tariffs mean inflation, period, and then others maybe ignoring data that didn't quite fit a pro-tariff narrative.
It really shows how tricky it is to read these tea leaves, especially when people have strong views already.
Absolutely. You've got to look at the data itself and consider all the moving parts. And the video made another point, even with the tariffs that were already in place before this latest round.
Yeah.
We weren't exactly seeing runaway inflation reflected in the CPI then either.
Okay, interesting point. So the big picture numbers aren't screaming tariff inflation right now. But let's zoom in. What about specific categories? Food prices actually went down a bit.
They did. Overall, food prices dipped 0.1% month over month in April, and food you buy at the grocery store, food at home, that dropped even more, 0.4%.
Any standouts?
Eggs, remember eggflation? Well, egg prices plummeted. down 12.7% in the month.
12.7. Okay, so that's definitely over. What about energy? That's always a big driver.
Energy was a bit of a mixed bag. The overall energy index did go up 0.7% in April,
Okay.
but that was mostly driven by utility gas, the piped gas service. Energy commodities, things like gasoline, actually went down 0.2%.
So gasoline prices fell.
Yeah, gasoline was down 2.2%, while fuel oil went up 1.3%. So different pressures within the energy sector itself.
Okay. Now here's one that seemed to surprise the rebel capitalist analyst. Used cars. Prices dropped again.
That's right, the second straight month of decline for used vehicle prices.
But they expected them to go up. Why?
Well, the logic was, if tariffs make new cars more expensive,
Ah, right.
then maybe more people would look at buying used instead. That increases demand for used cars, and theoretically, prices should rise.
Makes sense. But they fell instead.
They did, which suggests something else is going on, maybe a stronger force at play. The analysis in the video floated this idea. Maybe overall consumer demand is just weakening.
Like weakening enough to overwhelm any price pressure from people switching from new to used.
Potentially. That could
Yeah.
be the dynamic. People might just be getting more cautious about big purchases like cars, whether they're new or used.
Hmm. And does that tie into anything else? Did apparel prices do anything interesting?
Yeah, apparel prices also saw a decrease in April.
Okay, so used cars down, apparel down. That kind of fits with this idea that rebel capitalist analysis put forward, that the consumer is, quote, completely tapped out.
It does seem to point in that direction. The conclusion drawn was that maybe this lower CPI reading isn't just about tariffs having a muted effect.
But maybe more about the economy softening. People just don't have the spending power.
Exactly. A broader economic slowdown, perhaps. The analysis even threw in the idea that stock market swings might be making even higher income folks a bit more cautious with spending.
So these drops in non-essential categories like used cars and clothes could be a signal of weakening consumer demand overall.
It's definitely a plausible interpretation suggesting maybe economic pressures are building up.
Okay. Now, the video did mention a counterargument about tariffs, right?
Mm-hmm.
Even if prices aren't jumping now, there could still be issues later.
Yes, that's the supply shock argument. The idea is, even if tariffs don't immediately translate into higher checkout prices, they could still mess with supply chains.
How so?
By reducing the flow of goods, say from China, if less stuff is available down the road because of these trade barriers, that could eventually lead to shortages and push prices up. A sort of delayed reaction.
Right. A potential future inflationary pressure. Something to watch.
Definitely.
And lastly, what about the Fed? How does this CPI report potentially influence their thinking on interest rates?
Well, the perspective offered in the video was sort of like this. If you really expected major, long-lasting inflation because of these tariffs, you probably should have seen some hint of it already in the April data.
And since we didn't see a big surge.
Right. Since the data came in cooler than expected, it might suggest to the Federal Reserve that maybe the immediate inflation threat from tariffs isn't quite as severe as maybe some feared.
Which could mean.
It could mean they feel less pressure to keep interest rates super high, especially if other data also points towards weakening demand rather than runaway inflation. It might influence their next move or lack thereof.
Okay, makes sense. So wrapping this up for you, the learner, the key takeaways seem to be, 1, the latest CPI was lower than expected. Widespread, immediate inflation from recent tariffs isn't obvious in the April numbers.
2, we saw these surprising price drops in areas like used cars and apparel. That could signal consumer spending is weakening, that people are feeling stretched.
3, while the long-term supply chain impact of tariffs is still a question mark,
Yeah, that's still out there.
this report might give the Fed a bit more breathing room, maybe less urgency to hike rates if the economy looks like it's cooling.
Which leads to a good question for you to mull over. Is this lower CPI reading just a temporary thing, maybe driven by this weaker demand? Or does it signal something more fundamental changing in the inflation picture, even with all the trade tensions?
Right. What other clues should you be looking for? Maybe future inflation reports, retail sales data, job numbers. How will they fit into this puzzle in the coming months?
Exactly. Keep watching those indicators. Keep thinking about how these pieces connect. Understanding these dynamics is really key to navigating what's happening in the economy.